Jobless figures came out today. It was a bit of a shock to see unemployment edge higher, up to 4.1%. Could this have anything to do with the number of businesses that we've seen close recently? And what impact will today's figures have on the likelihood of another interest rate hike? Leith Van Onselen is the chief economist at macrobusiness.com.au and joins me now. Hello, Leith. We now have Leith. Hello, Leith. Sorry about that.
Oh, g'day, Kathy. How are you?
I'm pretty good. Now, tell me, the unemployment rate has gone up to 4.1%. So how much of an increase is that?
It's not a lot, actually. And the reason why the unemployment rate went up was because more people are actually looking for work. It was actually a really, really strong labour market release because Australia actually produced 50,000 jobs in June. And that was more than double what economists expected. So economists had tipped that we were going to that the number of jobs are going to increase by about 20,000, and instead we got 50,000. So it was actually quite a strong result. We also got an increase in the number of hours worked and the underemployment rate. So that's people who are working but want more hours. That actually fell by 0.3% over the month. So it was actually a strong result.
So Leith, tell me, is this good news or bad news then?
Look, I mean, it all depends, I guess. It's overall, it's good news for the economy. Obviously, we don't want to see people lose their jobs. But if you're someone who's banking on an interest rate cut, this release on its own will not prompt the Reserve Bank to either hike rates or cut rates. What it basically means is that it's basically a neutral report for the Reserve Bank, and they'll basically look at the June quarter CPI release that comes out late in the month to make its decision on whether or not it's going to raise interest rates. But the Reserve Bank has to juggle two things here. It has to juggle both price stability, which is basically, inflation, and also the strength of the labour market. And what this release has told us today is that the labour market's strong, therefore it's not going to preclude it from hiking rates. And now its decision is going to depend solely on the June quarter inflation number.
So we've just got to wait for that. And that comes out when? Next week?
31st of July.
Right. Okay. Bated breath. How does Queensland compare with the rest of the nation in terms of new jobs created and the unemployment rate?
Yeah, look, Queensland numbers are actually mixed. So Queensland recorded stronger employment growth over June than the national average. So its employment went up by 0.4% versus 0.3% nationally. That's great. It also recorded a 0.2% fall in unemployment, whereas the national obviously went up, and Queensland's unemployment rate is 3.9% versus 4.1% nationally. So that's all good news. But it wasn't all good news because Queensland also recorded a 0.2% rise in its underemployment rate, and that is sitting well above the national average. So basically 7.1% of Queenslanders are underemployed, so they want more hours, versus 6.5% nationally. So it's a bit of a mixed picture there in Queensland.
Would that have anything to do with the closure of retail and food business closures in Queensland?
Look, potentially. I'll just say though that Australia's employment market at the moment is actually, fairly artificial. So basically, the market sector. So that's effectively your private sector jobs that aren't relying on public spending. They've actually added zero jobs pretty much in the last year, and also the number of hours worked in the private sector, the market sector, has fallen. All the jobs growth has come from government areas, so mostly the NDIS.
Right.
So we've had a big boom in healthcare and social assistance jobs, primarily related to the NDIS, and that's effectively what's basically held up the national jobs market and the economy over the last year. So it's a little bit artificial at the moment. It's not really reflective of the economic conditions. Obviously, if you're a private sector worker, it's been a lot tougher, and we've seen, massive insolvencies in retail, in construction, in hospitality, those sorts of things. But that's been offset by this boom in sort of NDIS public sector jobs.
So that sort of seems a little false then, doesn't it? As you said, it's government work, not private sector work.
That's right, yeah. Effectively, it's the public sector roles that are actually propping up the overall employment market. And if you actually look at the private sector, the market sector is what it's called, we're actually creating no jobs in that area despite population growth, and the number of hours worked is actually fallen slightly in the market sector. So all of Australia's jobs gains, and the reason why I've got this low unemployment rate at the moment, is because of this public spending.
Okay, final question to you, Leith, because you talk very simple terms. What do you think is going to be the Reserve Bank's decision after the inflation rates come out on the 31st? Crystal ball, come on.
I don't really want to sit on the fence, so I'm going to say they're going to hold. I think they're going to lean towards holding the holding interest rates. But then again, we just don't know. We'll find out on the 31st of July. Basically, if the inflation rate comes in above 0.9% for the quarter, they might hike. If it's 0.9% or lower, they'll probably hold. So we just have to wait and see. But I'm still leaning towards hold.
All right. We'll come back to you on that for sure and see what happens in the coming weeks and next month. Leith Van Unselen, thanks very much.
Yeah, thanks, Kathy. Speak to you next time.
Leith is Chief Economist at macrobusiness.com.au. It's now 30